Hey guys, morning. It's 2 minutes 10, 9:58 a.m. Bit late this morning. Had some stuff to take care of. Had a reasonable overnight trade. Yeah. So that's my mom now walking and walk over here. So we had a pretty good night trading. Live streamed the entry on how I traded the 2440. We sold the 2400, got taken out, managed through the 2400 with a little better than break even. Got locked in on the POC on the open, took out for one, got stopped out in second, close to break even, a little small loss. We waited for the Japanese market to open. We were looking at the identified 2440 to be the inflection point. Japan opened right about here. We got in at 8:10 using our sell stop. We got the sell stop. We got out of the market at 2400. Got a small bite of this extra run through, if you know what I mean. Wink wink. Position wise, we have like about 500 total in the bank from that. You can see the reaction this morning came straight off of that point of control, showing the bears in the market. Right, if we showing that, yeah, just essentially just to get bread to make sure that we have food before we get stuff. The corner shop is right down the road, so I just pop across in our way. Right, so we see in the return to yesterday's point of control. So how we came up with the 2440 was yesterday's value area high. So we waited for the punch to the upside, waited for Japan to open more. Always look for the volume. We don't like the trade between the 6 o'clock hour here unless we have a strong feeling like the close over here. I'd rather trade over this because you would always see a return to one point to the other. It's either I miss the trade or you have advantageous position. You had some big order flow to the downside. Almost hit the lock limit, which was 72. If you look at the trade plan, 22.72. Bounced to the upside, clocked the magic number, which to the left. Yeah, the overnight high was at perfect entry, 24.15. Couple of you guys got in that this morning during the London Open and just had a feast. Right now we didn't trade the US Open. That's what we were busy planning on, trying to work out what we gonna do. Plus I was trying to manage some stuff on my side, trying to figure out how much equity I should be holding at this point, if any equity at all. Managing the option that we couple of options that we have in on the ES. On oil, kind of more or less balancing out within the bigger range, looking for, if we do get the punch to the upside, downside, looking to play off value. So if you're looking at value last night, you would have gotten a close opportunity on value low in the market. So we're looking at value here high, point of control, value low. Today, if you're looking to be short, 2350 might be an opportunity for you. We have a single on this particular trade right here. Now, I am not trading the oil contract for myself. We have one of the boys actually handling that. He's trading and scalping and doing what possible on his side. So this is just more or less the main idea that we have running for the oil. You can see what we have here, point of control, looking for the structure to the 30 point stop, trying to play the edges on oil. What is a little bit worrying for us is gold has not been reacting as a true hedge, so be very careful. or if you trade in gold, we don't actually like to trade gold at all. We don't really have positions in gold. Alright, so you can see between the ES and the micro ES, you have a lot of volume on the micros now, meaning that a lot of guys using either you have big boys using smaller contracts to hedge their positions because they got puked out of the market with the gold also, because what we think happened was with the market puking out and more or less run free fall. A lot of guys who use the hedge for gold got pulled out their position and the liquidity, pull their liquidity to gain some, like same thing we do for our options position, use the options money to get back in to manage our equity positions, to boost up our equity positions, or just to hold still on the equity for the long term. So that is trading strategy a lot of people use that. That's what more likely happen to gold. The ESs acting a little better with liquidity and points we're looking at in the market. This was yesterday for volume and value. You can see where you might find that lock right on the POC here. That is now 10 a.m. So what we are looking to execute is look for the punch test to the upside right there with the liquidity, same point. What we say, rinse and repeat. This is your 950 open here, looking for to fade that move. So what we do have is a sell right at 70 72 72 70 to 75 is a kill zone. So we're looking at 72 as the entry. Is one perspective working order, and second we're using our sell stop to have this order to work this order. So we want to see a punch to the upside, not a break of the level and the reversion. So we're using the structure for the entry. So you can see where the structure is here for the entry that you're looking at. So we want to see if we see the break to the upside. This is the kill zone here, as you see now. Now we see a break to the upside, test and rejection. You want to use your still stop in this position here now. Crap. Alright, so you want to see non-break of this and then using a sell stop. Of the level. If it does break, we're looking at the 24.15 only as the selling point. So we do have a working order to contract micro working order right here at 24.15. This is a double order here. That is with these we made our order we have for today. This is the minor. If you want to trade a single offer this, you can trade a single offer this. Alright, you want to see clear rejection first. You want to see the volume and the clear rejection, and to execute your trade you can execute live at this level. In our opinion, you want to know which part your stops are. 82 is a stop. If you're using 15, you're using 70 to 75 as your entry. We trade in two contracts because what we gained from last night. Looking to sell 75. You can see where the stops are at 87. When they get locked in, and then put the push down, and then look for the structure to the downside as your TP. 70 to 72 is your entry. If you get in early, if you're trading live, you can trail and follow based on what you see. We're using our working order, so I just pause it. We'll see how it run through. I need to go and pick up some stuff.
Order filled. Stop field.
We got stopped out there. I now went to the corner shop, which is adjacent to the corner bar. The about stuff for not having any gatherings, so the bar will have to be shut down. Which is a big step for us. We have 9 cases or something like that. We got stopped out on that, so we're back at the 2400 level. You can see why we're looking at the 1415. There's a big break to the upside. Don't know if it's newsbound or what the hell it is. Yeah, with this amount of volatility in the market, it's pretty strong. What the hell? Technology attacking me because he got attacked also this morning.
Order filled.
Got slippage here. Got slipped a bit. High volatility. Maybe sitting working order. What is with this technology, man? So I lost like what? 150 there. Minus 150 so far this morning. Push through that level. On the scan and CPC and news, I haven't heard any news on the wires yet, so that is why we looked at entering into that position. Please observe today is the 19th. Fed. Doom. I was aware of that. Alright, I had the liquidity pool, but that was announced yesterday. That is the grant provide liquidity to all the banks. That was announced since yesterday. That's weird.
Order filled.
Locked in first order. Dropping my risk a little bit. Expect the order flow to dip from there. New zone 24 is already stopped. 10 points are risk on board. Clocked out 13 points. Looking for a retest at that 2380 level. You can see why we're looking for that. There's the kick point, the breakout point. If it does continue to the upside, we want to make sure that we are minimum risk. We at the close yesterday. Yesterday's close. Looking to see if we have bears still in the market. If not, we'll get stopped out pretty quickly. Expect the market to cool down a little bit. As I trade micros in a high risk environment is easier than trading because to handle that amount of loss that would have been equivalent to about 650 early in the morning in like 5 minutes, and then trying to get back into the game would be very difficult. A lot more patient. It wouldn't mean that I'd trade. I would try to be patient. I waited at 35. In this way, trading micros, you allowed a little more risk. So down 150 or $60, $55 this morning. Near $500 now, you getting some clean trades. 2400 will be pivotal today. The market will be moving fast. If we see second bar either hold and middle roll stops to break even, they guarantee us to lock in that amount of profits. Up to $100 profit on this one so far. When I take full value of anything, question is, right, so need to see this second bar close below here, the roll stops more or less below this line here. So 24.5, you want to see the bar close on either before you roll that stop. Otherwise 2400 may be support. And look to run through the order flow. We're looking at we had a lot of liquidity there, so that's why we ended up at those 2 points this morning. On normal days, having 100 point winner on micro is pretty good for the entire day. That's like the range for an entire day in that one bar. Maybe we'll go ahead and roll stops. $24.10 with our stops. Want to take advantage of the entire market. Want to see what the market plays. We only have one contract remaining, so we're gonna trail this stop and looking for extended targets. Trying to pocket a lot more than we looking at that 55 closely. So I take it if him add more than one contract possibilities, make sure you close one of your contracts already and have the secondary running, and keep rolling your stops down. Look at the market to manage. Always entails more risk in the market by managing the market as best as possible, looking for letting your winners run, and if you need to, if you get stopped out, you get stopped out. So using 2400 as more or less the line in the sand right now. Want to see follow each bar on the second bar. So I need to see 1, 2, 3 bars, 2 bars going down, and that's how I trail. Follow the order flow, monitor the delta. You can see not a lot of delta going to the upside volume wise. See this 2000 here was the kickoff point, and this little bit of delta provided that high point, so you know your most delta is to the upside at the moment. You want to see price versus delta. You want to see this delta be the negative side at the close of the bar. If it's not, you'll be thinking about running through the trade and the exits. So make sure if you're trading more than one contract, you should be close to one and bank the profits. You want to follow the order flow. If you do equipped on the stop, you already banked some profits already, so I guaranteed myself some profits on this trade.
Order filled.
The oil is filled. Guy just now got filled there, 2350. we're looking for within 30% stop, 30 point stops. Looking for VWAP touch, or we 2-to-1 trade. You can see the order flow is more or less a little bit against here, so be very careful with the trade. If you trade in oil in a high risk environment, so trading oil, remember, you need a lot of leverage to trade oil these days. Looking for the return to at least the return, the entry, GM entry right there. That is your pivotal entry right there at 55. Looking to see if we fade the market into the market. More than likely, there's a high risk trade, so advice is not to trade that as yet. Let's see how that flow on the close of it. This puts the test your managerial skills, or it doesn't manage our trade. You always look for pivotal points in the market to enter the market and manage through order flow. Order flow looks iffy at the moment, so we know we given ourselves 4 points, that is $20 today, plus we took 65 to cover the entire trade from the last trade and trying to trail this. We have potential lock spots in this 80 to 70 range, 75 range is what the potential follow through exit would be if we see in trouble. I'm trying to let the winners run on it. So this is how I manage my stuff live in the background and traded on the micros, seeing the type of volatility we have in these days. Or the most important, if you want to trade in more than one contract, most important thing is clearing that first contract, so you're guaranteed banking yourself some money. You know, 2400 is the pivotal level. We use delta and volume value as what we're looking for on the trade. Single bars could take you out, that is pretty quickly. Single bar made us profit, single bar could take you out. We wouldn't drift here because what we see in the market is doji, we don't lock at the 2400 yet. We want to see if the 2400 plays out. If we do get stopped out, we lost in some point. Got a little bit of slippage this morning also. My chickens, those chickens. Right, if we do get stopped out here, we sit and we watch and then check for reload. Knowing your location and where it is in the market is very important. So I do have the chat box. Hey guys, what's up? Hey there, yeah. It's all about risk and risk management, how you need to trade, especially in the environment. The environment is high volatility. If you get stopped out, you'll be stopped out pretty quickly. Failures if you're using tight stops and you're trading on a mini, you'll get ripped apart. At the beginning of this, I got a lot of rips against me. I mean, I take like some $50 risk, some stuff I risk. The easiest way to manage this type of stuff is if you use a stop or a stop entry, meaning that you're trading waiting for the market to hit and break through. Last night was pretty good. We got some clean trades. We bided our time, took that Japanese trade, like a boss, as we just say, like a boss, because we and if it was what look if you looked at the trade plan, we had for the sell, we got out a half a point of control was right here, got out at 75s. On first one, roll the stop, made so we guaranteed to sell same profit. We waited, we saw the punch against that quick reversion down to the downside, retest, and here was the Japanese open. Watch the order flow, you know where we wanted to enter. We wanted to enter that 40 on the order flow as we saw the bounce on the open right there. We got in there. I got the order flow to the downside straight out. That was a easy winner for us. We did do something here last night which gained us a lot of money. We actually traded now mini day because we wanted to see the order flow in a particular way to get the mini, so we're back in the game on the mini with that. It have good days and bad days. Oh. So we know the 2400 is very important today, so you can get break against for that. So that's the reason, the security of that. You just monitor the market. First thing is the most important thing. Always take off half of your position at particular points to make sure that you're secure. In the worst you can do is break even. Right now we pocketed 13 points and guarantee we sell 13 and 4 17 points in the market. We lost 26 points, so we are a little bit down for the day on the trade. Try to get in here, trade failed. You can see the bounce came off right off of the upper side of the band, push go through. We tried to get in on the short side, failed. Know where you're placing your stops. If you do have your stops on break, you might have nothing against that for your secondaries. Is easy allocation, and then look at the market and see where how much advantage you can take off in the market. If you do get the order flow to agree with you, you get the order flow to agree with you. Allow your winners to run. Always try to do that. Point of control. If you had that risk amount this morning, we had some risk here on the live side when we had the meeting. You could see that little small gap here. See this gap here? Shows the lack of liquidity there. Right there. That is what we call mighty triggers. So what the market is actually doing now is pulling that gap. You can see where the inflections are, pulling that gap. And the reason we were looking at that 15 is it got stopped out.
Stop filled.
Right. The reason we use that 15 as the entry is, you can see yesterday we were looking at that initial push on the open using the technical point right here. This was the technical point we were leaning on. I was talking about last night after we were doing the trade recap. We were looking at that 15 for the perfect entry to the downside. Well, let's get what most of that to the downside. I'm saying that. So what we do now is monitor. We made a little bit of profit. We monitor the market. We looked at the delta. Monitor the delta, watch the volume and the value of the delta. Also, you can see the value of the delta to the downside previously was a lot higher. Market reacting to a lot less delta to the upside. So you put your hands in your pocket for a little while. Look at the value high. That 35 to 40 again. Watch for this test over here. So this would be a kill zone here. So you're looking at the rotations in the market. So we made a little bit of money on that side. We have the oil still trading. This is the kill zone here. It's a little bit of a wide kill zone. You're looking at the point of control. Yeah, we don't have a working order sitting here. Nope, don't do that, don't do that. See right here, this is what we're looking at. we'll be looking for it. Either that or be aggressive and look for the re-entry here. We don't want to be looking for the re-entry as yet. Want to see how the market plays off. Want to show some patience. So you can see why we entered 14. We could have suffered a bigger loss there. Don't want to suffer that loss. Want to make sure we break even. I always try to manage the equity in the market. So we have a kill point right here. Trying to wait to see if the market does break to the upside. We know where the high of the overnight high is. That's why I leave this line here, which is the day range line. I'm not again selling off at the point in time because you know which part of structure is right here to the upside. So if you're taking pinches and you take a pinch, that's where you're looking at. It goes off in the position I was in. That's a no. You want to see what the end of the hour might look like. Taking a small five, they're gonna grab some coffee and come back. My peoples want me to do some stuff. Yeah. Oh, probably missed both here. Small thing. Trade what you see. Trade small, trade smart. Take what you get off of the market. Might be locked up inside there, which is the point of control. When you see the bongs to the upside, using the breakout as the entry right here. Use the break as the entry in this zone here and kill the market off. You can see structure here, look, if you see the breakthrough here, go up, back, and then re-enter is the continuation trade you're looking for. I got the kiss of death, which was just stop my out from the entry. Didn't want to return because I had 2 contracts. If it had played straight a downside, for sure I would have been entering right back there and wait for the trade. Still have some money running on the oil, looking at the up as the exit, watching the order flow. You see order flow is more or less confirmation. So when you're trading in a high volatility environment, now this is where order flow, because remember everything, every indicator is a lagging indicator. This is probably as close to as a live indicator. That is why we use that. We know why we identify this area here. We know what we want to see for a continuation trade. Looking at the entry, best entry here. This is the aggressive entry here. So we want to see an entry at 96 to 98. Our entry is at 96. Make sure it's right there. Using a 13-point stop. We know where the bounce, the fill order might be. We know where, if there's a ball over here, where the major decision points are. So it was like, yesterday we was talking about the 2350, how it was holding up. Based on how it was holding up, we know it had a big boy here. So once the big break came, we know how to take advantage of it. Hit, retest, continuation. Always be mobile to have be set in your ways on how you want to trade. Trade what you see is always equal. Always equal. Trade what you see. Enter risk where you can see you can afford to enter risk. Know that you can get pierced through and then pull back, so trading working order is it's a little bit more comforting to me. So let's, right then we have this, go through some stuff. Right, CME. Margins are ridiculous. There is the volume scanner. Not you. The US is clocking something like, I think, a little more than 9,000. Nope. Yeah. At maintenance margin. Ouch. Yeah, that's what trying to put more from trading a lot of minis. Could become a rich guy, but don't want to take that kind of risk. I don't already take out 5-digit last month. Yeah, hopefully be able to come close to maintaining that 5-digit this month and trading to see what we could get off of the market. Trying to see if we could maintain somewhere in the region of 8,000 on the minis. Made most of it already this month while we're trading the minis until that number hit that. That would be obvious or that trip for us. Your most aggressive entry there should be 23.90. If you're doing options, we got into option We sold in the money there. Option spread to the downside at 24.10s. We sold 24.10s more or less at the money. The option spread was 24.10s to 23.30s. Trying to see if we get that order flow to the downside today. Options do cost a lot. If I have the option chain here. Don't know if my option chain here. Yep, here's the option chain. So the only thing I'm holding right now is more or less on the equity side is Tesla. But what the hell going on with those chickens? Ridiculous animals. You can see the cost of this option. As always, trading options are totally different to trading equity or futures. There's a clean break. You want to see that clean break to the downside. Missed the boat. No biggie. I want to see what London Crude brings. We'll still be holding this working order on the outside here. And we have the oil in play. So if you're trading the oil, be very careful how you're trading the oil. Very, very careful at London Crude. That is a pivotal point. You can get swept easily. There's an advantageous position we're looking for to be in the market there. You can see the order flow is dipping to the downside, following reasonable order flow on it. Just got swept, left something on top stuff on the board today. Not too worried about that. So the market trades, we took full advantage of the market last night, so can be picky and choosy as we say. If you're trading and you want to be safe, trade a single of that 96, 94 to 98. This is an user point. You want to see that chip off there at 94. That is the most likely return. Right there. And put your stops above here if you want to swing trade it. You know exactly why you're putting it above the 15s. Looking for the short in positions. I'm trading 2 contracts because I could afford to trade 2 contracts on the micro account. We do load up some once we have advantageous positions. We want to be able to load up. Oil is only on singles because of the cost trading oil these days. Always look at your cost, your margin and stuff. I know top step guys don't really have to study that. They have to study about risk. And it's always a give and take between risk and margin, because you don't really trade margin. It's a hidden margin when you're trading on top step. Oh, last night when I was streaming the actual trade, the cell or the 40 I was playing a video game. Lot of fufu-nuts, we just call them fufu-nuts. Little children playing that game at some point. Wait for the end of the hour. Before you enter anything, look for the breakout, because you could get ripped up on that breakout. If you're lucky, you might get the order flow, but if you're unlucky, nope. May risk the single off at 11 AM. Watching closely to see if you want to risk that single there, making sure that our major position is up here still. I want to see where the price action of here. I want to see if the order flow continues. You want to see that order flow continue to the downside and then join the bears using a single only. I'll pull up my I'm not too hurt too much on the Teslas. Everything else more or less covered. what we wanted. Covered it. We had the cover and trade. We pulled out the cover and trade on the anthem. We got out at 22, 25 or 30 yesterday on the trade. That was we average entry in Tesla. We above our average entry in Tesla. Last entry we got was 30, 80. We had 50 shares now. 50 official shares that we have. We're looking for Tesla's probably the most, but to be rebounding a little better than the rest of the market. We sold the anthems at 300. See if I can pull up where we sold the anthems, why we sold the anthems before all this happened. We were looking to be short on the market. This was actually in as we sold right. Yeah. So we sold the options. The cover it as well. We sold the equivalent of 50 shares, option 0.5 full option. The cover that we got out right there at 24, 22, 20, sorry. We have the banks trying to hold up the market at any cost, at any cost. The bank is trying to hold up the market. And there is a reason why we're looking at the 93 as breakout this morning. So got to find that for you guys. Trading is a load need job, so that's why you hear me speak a lot. CME plus my chickens have kills me, they kills me. Look for your ESMO, not ESMOP. It's your reference price 23.93. That was the pre-up in the last 30 seconds. So that's why I look at that as it. I'm gonna wait for an hour here, trying to see if we could take a pinch off at that 70th level. The first initial level we were looking at this morning. I want to see flare break, return, and then enter. You can see why the 93 reacted this way this morning. That's why we know that was a possible stop point for the market. Oil is in whipsaw mode. You can see where we have a lot of absorption going on in the market here. This is why we talk about oil being dangerous to trade here. Right. It's the same way Dan speaks about risk and how he starts his stuff. We get breakout easily from that point. That point is point of control. We have very little protection by way of how much we can risk in the market, so we have to take a loss on the oil. Because our trading oil these days is ridiculous. Ridiculous, I see. 5 minutes away from the 11 a.m. We want the time. Try to time the entry on the trade. Using a single here, looking at the order flow, knowing where the risk is, knowing how to manage the risk. On the trade, looking at the kill
Stop
zone.
filled.
Yeah, I got stopped out on the oil. Where? Piece of shit. See you are wait for that 11 a.m. See the burst, the return, and try to get the highest price you could catch. Based on what we see, we be either looking at the 93 entry for the two contracts, or enter a single aggressively within the band. Right here, maximum entry is at 80. So what adjustment we make into the market entry is at 93. So that is why you would have a lot of guys who like to look at signals, people who follow signals. I don't have nothing against them, but I used to be a signal trader for particularly a hedge fund. I used to trade, well, input signals for traders to trade off. That was my small previous part-time job. Pretty successful at it, just payments wasn't that good. I tried to hold back some money on me a couple of times, and I was like, alright, enough for you guys. I'll just go back to do what I was doing. Here comes 93, 3 minutes away from the end of the hour. I wonder why that happened. And the reason why we have 13 points as risk, using 12.5 on Dynamo. 13 points as your risk is because of this. Let's try to get over here, by the way. Boom, 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 boom. I use implied volatility. There's one tick behind that. Oops. See F8, do that. That divided by 4. Using 25%, usually we use 20%, using 25% because of the amount of volatility in the market. So you want to see biases to the downside, you build your bias. Here's where you build your bias. You don't get married to a position right now. You want to see downside move. We're looking at using 2400 as the area we want to defend. I want to see kill zone right here, 93. You have this small kill zone here, so your entry is working the order is between 90 and 97. You want to be working within this range here as a kill zone. Use your structure. Come on, puppy. Why you want to fight me today? Finally. Kill zone, perfect entry, look for the push straight downside. Missed by like what? 1 minute. The high was 91.5. 1.5 points, and this is like the blink of an eye. Spoil little child, spoil little child. This is what the problem is. See that? That is volume coming into the market. So that is why we remain here. Don't want to execute that trade as yet. We'll sit and watch. Put my hands on my underneath my butt and relax. Let the market come to me, make my decision. Just let the market come to me. I'm trading 2 contracts of the 93. I want to see the order flow delta push up probably hit that 2000 on our two bars and have the absorption. We're looking at the bookmap. The bookmap is showing me that 90 to 95 area is very liquid, so we'll have options guys sitting there doing what I did earlier, waiting to pounce. That is the implication. If you're clipping off 90, you need to have your stop beyond this 03. If you're clipping off 90, I'll sit and watch the market develop. I want to get this to be as close to perfect because I know the amount of risk and I don't want to extend my risk too much beyond here. So if I drop the entry, I would be within the zone. Then I'm gonna have to make an adjustment to the number of contracts I traded, tra la 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 la. It's a whole mental process you need to go through. Then you have to watch the order flow if it is against you, with the risk of it pushing through your level and then coming back down and working the order. So that's why I tend not to enter live in the market. Until I see something worth entering, which is a breakout or something, breakout return. What we're looking for is the break to the downside, the return. So once we cleared this 70 level, picked up here, want to see the return to the upside and then come back, continuation to the downside. Making sure that we clear the first hurdle here, which is at 80. So that's why we want to see that. We know we have a lot of liquidity in the a lot of volume in the market popping off in the area, so we know that will be the magnetic area here. So where this run off is really between me and my guys, we learn from couple of different people, so we just have different views on how we just manage entries and exits in the market. All I want to see is the order flow pop to the upside. Watching the order flow here. Rejection, rejection, rejection. Watch your order flow. A rejection candle there again. I want to see where the price action on it. I want to see what the order flow says. What it is, we know we the liquidity between 90 and 95, so we wanted to get 92 is there. I want to see where the candle closes. And then make up your mind if you want to shift to the downside and enter at 90. So 2 points and 3 points can be different between a great day and a miserable, frustrating day. I tend not to get too frustrated these days. Once like I had a night like last night, right? So I trade the way I traded this morning. A little bit aggressive, a little bit conservative. Trying to pick, you're not trying to pick points in the market, really. You're trying to look at the order flow within the market. Oh, I forgot to put those on, that's why. Nice standard deviation. Watch the price action, watch your order. See 80 is holding pretty well, 90 and 80 is holding pretty well, so watch, 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 watch. You know exactly where your stops need to be. I want to execute a single at that level. execute. Where I myself did not execute, myself executed here.
Order filled.
Execute looking for the break to the downside. Single only. Just looking to scalp. May get knocked out of it, but so be it. Switches over to a single also. I got my execution at 76. May get stopped out on this. Yeah, I got stopped out. I took a small risk on that, only took 7 points of risk on it.
Stop filled.
I took 7 points on the single. Reason is how the execution was. Using live execution is pretty tough. Got caught. Use a tight stop there. Wanted to get the 80s on the live execution, got 76. Got popped out right there at 7 point stop. I was trying to grab the market as quickly as possible and scalping. When you can use 10 points of a scalp on ES is something to behold in the market. We went back to 93. Ready to contract. Just missed time the trade. But timed it correctly. Realize the difference between executed and trade live. Sometimes it works, sometimes, a lot of times it doesn't work for me. So I don't want to be chasing the market, I want to let the market settle out. I have my major position on the other side. On what we think is the right side of the market. Can't be salty for that. At all. If you do have an entry at 80, make sure your stops are beyond that high, which is my entry. Seeing the market locking up a little bit, seeing the delta building. This time the entry, a little bad execution. I guess 12 vantage points is no. We use 6.5 points, so that's how we get knocked out quickly. It's half of this range here. That's how we use that entry. So you use multiple tools for multiple stuff. 80 still might be viable, so if you're getting at 80, count yourself lucky and use proper stops using your 13 point stop if you're getting anywhere within the 80 range. And I was trying to execute on the market, just slipped on the live account. That's the difference between having a reasonable day, make $300 to $400 and trading out. So you just look for your viability of your trades. I left some on the table this morning. I know I left some on the table. Doesn't frustrate me one bit. Those fucking chickens. Sorry for cursing, but those fucking chickens. They irritate me. I think I'll square down a bit. Not studying the oil too much this morning. Let it do what it wants. This is the break to the upside. We try to play right here. Support was found. Right there. This is the only other point we have. We're looking at trading today. which is 24.80. If the market does push up to that point, we'll be locking in option position at the option position at 24.80. Oh, I heard well, Nevada. What's up with this demo chart? This is why I don't like. Part of the reason I haven't joined Top Steppers yet. Major part of the reason. I don't know if it's the same for you guys with the desktop version. I use any web version, or this is not a Top Step, this is actually a 308 demo. We use it. If I didn't use that, if I executed well, I would have been a little bit safer in the market. Slowly cookie crumbles. It's about trying to pull the right entry. I want to see what the market does. We still have 15 minutes to trade. It's pre-London close. Probably just monitor it. Look at where we want to be, look at where the market is. We know where the inflection points are. We could see the volume building there. We also know here is the biggest inflection point to have right now in liquidity wise from the book map. So that's what we're looking at for getting into that trade. For between 90 and 96 to 97, looking for that entry. If the base did build here and we see new order flow building here, it might become risky, but see what is trading. Order flow pop.
Order filled.
Filled. No your risk, no way you're looking at. Look for your environment. If the play already played out, you know what the liquidity is. Using 2400 to defend yourself. 93 to 96. Look for the area to defend yourself. There's a lot of liquidity popping up the outside there. We're trying to break through, so might get breaked out straight up to that 2400 easily. Within the kill zone. I'm in at 93s. It's an early risk to managing. I'm looking to take a full advantage of the market. We do get it. This is our 1-to-1 on the exit. The exit is at 80 using 13 points as we stop on the actuals. Didn't have time to adjust my stop this morning. By the time that trade going on, play some video games if possible. This is what I do when I not trade and I don't want to look at it. Don't need to be watching a screen all day. Hopefully computer wouldn't crash. Hopefully. Always I even know like that on his side, most like that. Need to get a new mouse. I wanted my Peloton. Make sure set this volume up. just have some fun. Mostly given a lot of trouble to X5S, destroy. We need waffles and a light tank, I don't want to do that. Yeah, whatever. Just some run a little slow, so I'll pick up some lag. Collect my little boxes. Avatar. Make the supremacy mode. Yeah, reasonable sized online game. Everybody'll be live. Got a rejection from the downside, so be very careful of what you're trading there. I just leave it later on. Yeah. One of my old clan mates, probably about the 12 to 13 best clan. They have clans and stuff. And they do clan wars. Ooh, I'm lagging. I'm lagging pretty hard. Wow, this lag is real. The lag is real. Kill one. Ouch. I think I hit some of my partner there. Wait, now he just gone AFK and I tried to save him. Exit, new game. Eventually might win. In the kill zone. Be careful of what you're doing there. Now a couple reasonable tanks. These high level tanks. Oof. I am the lowest guy. I have guys who with a lot better tanks. Yeah, you guys lead. I don't know what the hell to do here. Lots of better tanks than I have. Break through the wall. Down here. Try to be as safe as possible. That guy has 3 shots in him. Lagging a lot with this. Don't know why it's just I'm lagging that much. Don't want to go there. bit of spotter bother here with those guys on the ramp. Alright, my boy reloaded, so that's a big guy. Captain him. Oh, lagged out. Yeah, can't play and stream. Total lag out. We got them. I'll get to my game later. Ooh, get stuffed out here, man. You see that is protection break there. Wala tabals in the market. Medyo wala flow. Why am I stopped? How am I stopped? Yeah.
Stop field.
Yeah, I got stopped out. Yeah, suck him on in. Probably might just go and play my video games. Phone support at the point of control. Expect the back to boost to the upside. You know guys, I'm gonna play video games. See you guys later.